Port of Los Angeles says it's winning the Great Supply Chain Challenge too, the largest container port in the United States, offering an encouraging outlook on the shipping bottlenecks that have helped fuel the US inflationary crisis. Now, as this graph dramatically shows, the daily backup of container ships at the port has virtually disappeared as import volumes soften. In fact, September was the weakest month for inbound shipments at the port since 2009, with imports falling some 26%. Now, some of this is due to ongoing labour negotiation issues, leading to cargo being redirected to other ports, and also weakening US consumer demand. To give us the context, Jean Seroka, the Executive Director of the Port of Los Angeles, joins us now. Jean, welcome to rainy, foggy New York with your amazing suntan. As always, it's great to have you here. When I saw these statistics, my first reaction was wow, and I'm glad to have you with us to get context. What part of this slowdown is because retailers have pre-bought early to avoid not having goods on the shelves ahead of the holiday season? What part of it is rerouted traffic because of the labour negotiations that you're undergoing? And what part is slowing consumer demand? What's your view?
Well, good morning, Julia, and it's great to be here in New York. Look at a 20% drop over the past 2 months, and it's broken down into two segments. About 12 percentage points is cargo that's moving to the East and Gulf Coast, premeditated by importers because they were worried about protracted labor negotiations and potential disruptions. None of that has happened yet. Both sides have put out 2 media releases saying that they won't cause any problems while they're at the table bargaining for this all-important contract. The other piece, about 8 percentage points, are cargo that came in earlier than normal. June and July were our peak months because importers did not want to get their cargo caught up in delays and make sure that they had it going through the omni-channel distribution network. We've also seen some bulkier cargo, appliances, sporting goods, and furniture taper off just a little bit. Those one-time purchases during the pandemic don't repeat themselves.
Okay, and so what we didn't talk about there was some inherent slowdown in purchasing and a lessening of demand. Jean, is there any sense, because we keep searching around for signs of sort of pre-recessionary behaviour or recessionary behaviour, are you saying you're simply not seeing that? It's other things going on?
That's right, Julia. What we've seen for July, August, and September, the consumer buying has been about flat, which is good because it's still elevated above pre-pandemic days. Yet we're all watching this very closely in the face of 8.2% inflation and higher producer wholesale prices as well.
Yeah, flat in this case, when you're talking about the inflation rates that the country's facing, is a positive, I think. You mentioned you've sent out these 2 press releases that have said, look, we may be negotiating, and we're talking of, 22,000 dock workers are involved with this union across 29 West Coast ports, 70 terminals, I believe, that are involved as well. I mean, it sounds dramatic on paper. Is that message getting through? And are people saying, fine, we may have redirected some of the traffic that we've planned over the past couple of months. We're going to redirect that back through the Port of Los Angeles now. Is the message getting through?
We've got to keep bringing that message to the import and export community because the cargo volume is not showing that. Unfortunately, we've got backups in Gulf Coast and East Coast ports, which does nothing for us as a nation from a competitiveness standpoint. We've got to make sure we bring certainty to the supply chain and keep this cargo moving fluidly as we head into the all-important retail season and the harvest season for our American agricultural farmers.
If, let's say, you did manage to get that message across and we did see the pickup in deliveries, can you cope with it? Because we showed that chart and it showed that the backlog that we've been talking about now, you and I, for many months is virtually disappeared. Is that just a product of the slower level of deliveries? Or if they did pick up again, would you be able to handle it?
I believe we can. We've learned so much over the last couple of years, Julia. We brought those ships that were backed up from 109 vessels down to single digits, all while moving near record amounts of cargo in the first 7 months. Only the last 2 months have we seen a softening in the marketplace. So we've been able to move the containers out at a higher velocity than ever before through our partnerships with importers, exporters, and our service providers. The Los Angeles Marine Terminals have done a tremendous job. That cargo coming back, all of our key indicators shows we can handle a large surge here before the holidays and help our retailers and others get product to market.
Good to know. In the past, I've also asked you about trade between the United States and China, and we talked amid the lockdowns in China, the emphasis that the authorities put there on keeping those ports open and working and ensuring deliveries and exports were taking place. What are you seeing, Jean? Because there's clearly a lot of focus on the numbers that are coming out from China and the obvious slowing that we've seen in the economy. And obviously, they're still running the zero COVID policy across the country where necessary. What does the data tell you?
The prioritization is still there. Folks like Yan Jun, who runs the Shanghai Deep Sea Port, Nangshan Deep Sea Port outside of Shanghai, has been doing a tremendous job, as have ports in Ningbo and South China. 60% of our trade, imports and exports, emanates to and from China. Really important market. Now, with Xi Jinping taking for a third term, there will be a lot of eyes on how we can continue to fuel that export market for China, of which we're the biggest buyer here in the United States. So there's a lot to continue to work on. Keeping that supply chain fluid between the two largest trading nations and biggest economies is key for success.
But you're not worried. I mean, clearly, if you look at the financial markets just in the last week or so, there's real concern that a greater level of control for Xi Jinping is going to mean policies that result in the suppression of growth. Any sense from you or the conversations that you're having that will have a significant impact from you? Because as you point out, I mean, 60% of trade volumes is huge. This has huge import for you.
It remains to be seen, of course, with the information that's come out of the meetings over the weekend and into the early part of the week. Exports play a huge role in China's GDP, and I know that's very important after having worked there on the ground for many years living in Shanghai. But also, American companies, both on the import and export side of the ledger, have been reevaluating their supply chains, whether it's moving to other nations in Southeast Asia for production and sourcing, bringing cargo back, manufacturing to near and onshored locations. All of that's being evaluated to make sure that we have resilience in the supply chain. This is not just one flip of a switch. Many of these relationships on sourcing from China have been built over the past 3 and 4 decades. More and more will come of this, and we'll have to see how this supply chain can continue to modernize.
Yeah, it's interesting to hear just your thinking now, particularly in a sort of ending of and post-COVID world. The resilience of supply chains is so important, and we're talking about it more than ever before, which can only be a good thing. Jean, once again, great to have you in New York. Thank you for joining the show, and we'll speak again soon. Jean Seroka there, the Executive Director of the Port of Los Angeles. Thank you, sir.